We're up to chapter 8, and we will be discussing my favorite subject, personally favorite subject, because this is what I've done for the last 20 years, which is investing your money. So there is a lot to be said when it comes to investing your money, and I know some people are afraid and they just don't want to think about numbers, or they don't like numbers. But you know what? You don't want to leave this to other people. You don't want to just let other people make all the decisions for you. You have to take ownership of it, and you have to start learning, and you have to start paying attention to details. And there's a lot to be talking about when it comes to investing. So let's dive into the investing and see what we have to learn. All right, so investing your money wisely. What does that mean? Like I said, don't be blindly following somebody else's advice or suggestions without doing your own due diligence and your own your own homework. So think about it. What I'm saying is really important. Don't blindly follow any financial advice, whether it's from a financial advisor or whether it's from a friend. A lot of times people say, oh, my friend, he's doing so well. People tend to only talk about their winners. They don't talk about their losers. So if they bought this great stock or this great investment and they did well, they'll brag about it all day long. But when they lose a lot of money, they do not talk about it. So do yourself a favor. When something sounds too good to be true, just move with caution. Okay, move with caution. So the first thing I want to talk about when it comes to investing is fees. Know your fees. Know the fees of the investments. There are all kinds of different fees involved when it comes to investing your money, depending on what kind of platform you're in, depending what firm you're with, depending what kind of product you're buying. There are many, many types of investments. So let's talk about some of the more obvious ones or not so obvious ones. I know a lot of people are familiar with mutual funds. So what are mutual funds? Let's explain what mutual funds are. So mutual funds are a platform or a product where people, regular people like you and I, can go in and put small amount of money and commingle their money with pretty much hundreds of other people or even thousands of other people, and commingle their money with these people's money. And you collectively as a community are hiring a professional money manager to manage your money for you. So all mutual funds have a management team. These people are typically, very well educated. They usually have a lot of different degrees. They have like a CFA, which is a certified financial analyst. They have all kinds of other, or MBAs, and many other degrees that they have received. And it's usually a team of people, and their job is to pretty much pick and choose the investments for the mutual fund. Typically the mutual fund will have it's basically like the blueprint. For example, there are growth-oriented funds or value-oriented funds. There are international funds where the money manager or the team of the manager only invests in international companies or international stocks. There are small cap managers or large cap managers, which are large capitalization companies or small capitalization companies. There are mutual funds that are dividend paying mutual funds. So the job of the money manager is to pick stocks that are paying high dividends, and so on and so forth. There are high yielding funds. There are real estate investment trusts. So there's a lot of different types of funds that you would want to invest in. And depending on the fund, there are expenses that are associated with the management of the fund. So the team of money managers, obviously this is not a non-profit organization, they do want to get paid, and they do get paid well, which they deserve if they do a good job. So the fee is called an expense ratio, and typically the fee is not obviously shown on the mutual fund. When you're looking at the returns of the fund, you could see, for example, if American Funds Growth Fund of America, right? American Funds Growth Fund of America, very, very popular fund. It's been around for many years. When they show their average return of, let's assume 8 or 9 or 10%, and they have an expense ratio or an internal management fee of 1% for easy calculation purposes. That means if they said they made 8%, that means in reality the fund made 9%, but then they subtracted their 1% for the management fee, and they're showing the investor the net 8%. And typically people don't really understand what the fees are because they only see the net return. But they have to understand, or you have to understand, different funds have different fees associated with them depending on the type of fund, or depending on the performance of the fund, and depending on the sector where they're in. So generally speaking, small cap funds tend to have higher fees because it's much harder to figure out which are the next winners, what are the good small capitalization companies that are going, basically which one is the next Google or the next Amazon or the next Tesla. So those funds tend to have higher investment fees because it takes more research, it takes more effort to manage those funds. And then you have, on the other end of the spectrum, you have large cap funds, you have large cap value funds, or large cap growth funds. In case of the value funds, these are companies like, utility companies like Verizon, or, you have companies like Home Depot that have been around for many, many years, Costco, and they have predictable returns, they have predictable business model. Like I said, they've been around for many years. So those funds, the large cap funds, tend to have lower fees than the small cap funds. Same with international funds tend to have higher fees than domestic funds, and bond funds tend to have lower fees than stock funds. So it's important that we educate ourselves, and it's important that we understand where could you find those fees. So, in this day and age, the internet has everything. So you have to know what to do, where to look for. If you have access to Morningstar, that's a third-party company, and they specialize in analyzing different types of investments, and they do analyze investments like mutual funds and exchange-traded funds and stocks and bonds and many different types of investments. So if you have access to Morningstar reports, that would be the first place I would go. And as long as you have the name of the fund, or so either the name or the symbol of the fund, then you can type it in and it will come up with a big report and will show you a lot of data, a lot of information. Typically it will show you what are the top 10 holdings within this fund, who are the managers, how long have they been managing the fund, how well the fund has done. It will give you every year return, what is, year after year after year, what the returns have been, the actual returns. It will also show you average returns. It will also compare that particular fund with many other funds that are in the same category. They will also compare that fund to its specific index. So different funds have different indices, so such as S&P 500 index or the Russell 1000 index. There are different indices different funds are compared to that are similar in terms of their makeup of the different stocks that are under the index or within the mutual fund. So important things to keep in mind, important things to understand.